The Reserve Bank may have surprised with its big 50 basis point rate cut, but the major lenders have so far remained true to form, only passing on some of it. Today, the National Australia Bank cut home mortgage rates by 32 basis points, but slugged savers a full 50, drawing the predictable fire. Higher funding costs dented ANZ's first half profit, but the bottom line was still a record. Here's Philip Lasker.
When it comes to interest rates, for the big four banks, silence is golden.
The big four banks save $12 million every day they do not pass on this rate cut.
The National Australia Bank has broken that silence, passing on 32 basis points to borrowers, but cutting the main saver rate by the full 50 basis points. The bank said it was due to higher funding costs. The Treasurer called it something else.
This decision is an insult to hard-working Australians with a mortgage or who own a small business who will rightly feel shortchanged.
It didn't go down well either, with some claiming the banks had already clawed back their margins.
NAB have had a commitment now that they would have the lowest standard variable rate of the big four. It's incredibly disappointing to see them go out first and, if you like, lead from behind by not passing on the full Reserve Bank interest rate reduction.
It wasn't the perfect PR day for the ANZ to prove that point, with a record half-year profit approaching $3 billion.
We have delivered strong results from outside Australia, but margins in Australia are down 13 basis points and profits are down 7%.
Critics claim the numbers support calls for maximum rate cuts, but Mike Smith says they prove borrowers haven't been the only losers.
We have, however, been transparent about the increase in funding costs, and these results show that ANZ shareholders are also sharing the pain of those higher costs.
The ANZ chief recently put interest rates up, but he pointed to the government's budget as the event which could do serious damage to the economy's prospects.
I think the fact that there is a stimulus effect from the RBA rate cut is a positive move, but I think what is more positive is actually dealing with the business confidence, the confidence to invest, and confidence requires continuity. It requires certainty. And the worst thing that can happen are further surprises.
The big business lobby group isn't quite so fearful.
It allows us to build a capacity to respond to future economic shocks, and it allows us to start provisioning for some of the challenges in the future, such as an ageing population. The challenge for the government in next week's budget is to have a credible strategy for a meaningful surplus, and to make sure that we're not doing the achievement of a surplus at the expense of economic growth.